Every deal you make in life has a set of rules that everyone must follow to keep things fair. These ground rules are what we call contract specifications. It is very much like a professional sports league setting the length of a match or the weight of the ball so that every player knows exactly what to expect. Basically, the exchange decides every single detail of the deal except for the price you pay. To see these rules in action, let us look at what you would see on your screen when you're ready to trade. We call these market quotes, and they show us the current action for a Nifty futures contract on October 3rd, 2025. Think of this like a scoreboard in a stadium showing the highest and lowest points scored during the game so far. This data tells you where the market started, how high it climbed, and where it ended for the day. When you trade a contract, you also need to know what real world item the deal is actually based on. That item is the underlying instrument, and its current cost in the regular market is the underlying price. It is like betting on the value of a gold bar without actually having to carry a heavy piece of metal around in your pocket. You are simply tracking the price of the real asset to see how your contract is performing. Now, you cannot just buy one tiny slice of a market index whenever you want. You have to buy a specific bundle. This bundle size is known as the contract multiplier or the lot size. Imagine you are at a grocery store and they will not let you buy one single egg. You have to buy the whole carton of 12. To find the total value of your investment, you just multiply the market price by this fixed bundle size. Markets grow over time, so the rules for the minimum amount you are allowed to trade have to grow too. This is why the market regulator, SEBI, updated the contract size limits starting in November 2024. It is like a landlord raising the minimum security deposit because the total value of the house has gone up over the years. The new rules make sure that every new contract is worth at least 15 lakhs to keep up with today's higher prices. These contracts do not last forever. They have a very specific timeline for how long they can be traded. This timeline is the contract cycle, and for the National Stock Exchange, it usually covers a 3-month period. Think of it like a magazine subscription that lets you look at the current issue, the next month's issue, and the issue after that. You can choose to trade for the near month, the next month, or the far month. Just like a subscription, every contract has a final day when the deal is officially done. This is the expiration day, which is the very last chance you have to trade that specific contract. It is similar to the deadline on a food coupon or a gift card before it can no longer be used. On this day, the exchange settles all remaining deals and the contract ceases to exist. Sometimes different types of investments will end on different days of the month to keep the market stable. These are specific expiration rules that help manage how many people are trying to close their deals at the exact same time. It is like a city having different trash pickup days for different neighborhoods to avoid a massive traffic jam of trucks on a single morning. By spreading out these dates, the market avoids too much chaos. To keep everything organized across the country, there are strict rules about which days an exchange can pick for a contract to end. This is the regulatory framework for uniform expiry days. Imagine if every school in the country was told they must pick either Tuesday or Thursday for their final exams to keep the national schedule simple. Exchanges must stick to one of these 2 days and need special permission if they ever want to change them. Right now, the 2 biggest exchanges in India have already picked their favorite days of the week. This is how the implementation of expiry rules looks in the real world today. It is like 2 competing television networks agreeing that one will air the big game on Tuesday and the other will air it on Thursday. The National Stock Exchange chose Tuesday for its contracts, while the Bombay Stock Exchange went with Thursday. When you are watching the price move, you will notice it does not just move by any random amount. It moves in specific tiny steps. The smallest possible move a price can make is called the tick size. Think of it like the smallest marking on a physical ruler, such as 1/16th of an inch. For Nifty futures, that step is 0.05 rupees, which is also known as 5 paisa. At the end of every single business day, the exchange checks in to see who made money and who owes money. They do this using the daily settlement price, which is an average calculated from the final 30 minutes of trading. It is like a teacher who grades your homework every single night to tell you your current standing instead of waiting for the final exam. This ensures that everyone's account is kept accurate every 24 hours. When the contract finally reaches its very last day, we need one last official price to close out all the deals forever. This is the final settlement price, and it is based on the actual price of the stocks in the cash market at the very end. It is like the final buzzer in a basketball game that determines the ultimate score for the history books. This is the price that decides your final profit or loss before the contract is retired. Of course, you can only trade when the virtual doors of the exchange are wide open for business. These are the official trading hours, which run from Monday through Friday. It is just like a local bank that is open from 9 to 5 but closes its doors for weekends and national holidays. On the National Stock Exchange, the action happens between 9:15 in the morning and 3:30 in the afternoon. While the Nifty is very popular, there is another major index you can trade that has its own slightly different rules. These are the specifications for BSE Sensex futures contracts. It is like choosing between two different brands of smartphones. They both do the same basic thing, but they have different features and buttons. Sensex contracts have a lot size of 20 and usually expire on Thursdays, giving you even more ways to manage your money.